Hi traders, it's Zoran Kresovic here, head of sales at Eightcap again. What I'm actually providing today is a bit of an update from earlier in the week. Trade Zone, another session. We've done one on Monday. I do apologize, first of all, for having some technical difficulties, and I wasn't actually able to bring all the charts on the screen during the session, but it seemed like we did actually fix it at the end, but hopefully today it will be smooth sailing. So how about we actually get started and recap from earlier in the week, see what's been happening over the last 24 hours in terms of the fundamental news, but also have a look at some of the charts and where we're heading into over the next couple of days, given the important data, economic data that's actually coming out later tonight and tomorrow as well. So first thing first, USDX, US dollar hasn't actually moved much against the majors. It's been actually going into a sideways pattern over the last 48 hours. We did mention the other day that obviously Fed is meeting up later in the week in terms of the interest rate decision, which will be fully dependent on the consumer price index that was actually due last night. So seems like the data that came out was actually in line with the expectation, and as a result, obviously no massive movement or volatility within the US dollar. So US dollar, as I mentioned, obviously brushing off the downtrend line from its peak in September 2022, and it's actually hovering more downwards for the last few days, and bit of sideways movement over the last 2 or 3 days. So not a major deal at this point in time. Now let's go back into the economic data calendar and let's have a look what's happened last night, but also more importantly, actually, let's have a look what's unfolding over the next few days as well. So I touched on Monday, CPI data, consumer price index, was actually a super important one for the US dollar. That will kind of indicate and give us probably a bit of prosperity in terms of where we're heading to with the 25 basis point interest rate rise or no rate change over the next couple of days when Fed meets. If we have a look at the CPI data excluding food and energy year on year, previously 5.5%, forecast was actually 5.3%, and actual was actually 5.3%. So what that indicates is that inflation is actually easing off. Simple as that. And downtrend is actually kind of kicking in nicely, which is actually giving a bit of sense of comfort for Fed when it actually meets on Thursday Australian time. Consumer price index on month, previously at 0.4, forecasted at 0.4 as well, and actual at 0.4 as well. So it pretty much in line or slightly to the downwards year on year, which is actually giving confidence again to the US dollar and potentially a bit of downward move over the last couple of days. Now let's actually focus on the rest of the week, because tomorrow and Thursday will be an important one. So how about we actually get started with Wednesday's data? Bank of England Governor Bailey's speech, that one is probably not going to move as much market, to be honest, but that Thursday one is actually super important. So on Thursday, we've got Fed interest rate decision. Market participants obviously expecting no rate change. Majority with economists as well calling a no rate change in line. That 525 will actually stay as it is. CPI data that came out last night also supports that decision, indicating inflation easing off, and as a result, it's highly likely that we will not see a interest rate move over the next couple of days. Another couple of important points as well, if you're trading New Zealand dollar or if you're trading Aussie dollar, which is also considered as a commodity currencies, we've got the GDP data coming out of New Zealand, and we've also got the unemployment rate in Australia as well. Previously 3.7%, forecast is also 3.7%. I did touch on Aussie dollar last week, and actually I got to give myself a pat on the shoulder. It was some good analysis there. So given the fact we had some technical difficulties on Monday, I would like to go through that chart today and perhaps provide a bit of an update on that one as well. But nevertheless, before I do get started, what I would like to share with you is perhaps a tool that I use actively, and a lot of us actually here at Eightcap implement. It's actually incorporated by one of our partners called A1, and the tool is actually called Edge Finder. So if you find this information useful that I'm going to actually present over the next couple of minutes in terms of your trading, I would strongly encourage you to actually have a look at the link below, click on it, and go through to actually find out more information, or simply please get in touch with us, reply to the comments on this video, or get in touch with us via Twitter, directly contacting Eightcap or by an email. Essentially, the tool provides a bit of indication and flow in terms of the smart money tracker, where the institutional money is actually moving at the moment, economic news. It's got also retail sentiment, what retail traders are doing at the moment, seasonality trends in a particular months in the year, which are actually more favorable for certain assets than other assets, and also central bank forecasts, price forecasts and inflation data as well. So whilst I'm not going to go into in a great deal, what I want to actually do right now, because I will be looking at the Euro USD today, and I will be looking at the Aussie USD as well, including the Volatility Index. I really want to focus on these two pairs in particular. And what I want to do is actually see where the retail sentiment is at this point in time, in terms of the long versus the shorts. Okay, so clicking on the retail sentiment here, it provides all the major currency pairs, and essentially what it does is gives in blue, what is the long, and red in what is the short sentiment out there. And the pair that we're looking at the moment is obviously Euro USD. So that's the pair that I've been looking since Monday, because we've got the European Central Bank decision this week in terms of the interest rate. And we can see that around 42% of the retail traders at the moment are prone to short. Sorry, my apologies, long, whilst 58% are actually more prone towards the actual short sentiment. So what that indicates is the majority of retail traders at this point in time are focusing more on covering themselves and actually going short euro versus the USD. Aussie USD, if you have a look at that one is actually heavily short as well. So Aussie actually is only 30% long, whilst it's actually 87% short. So from here, what we can see as well is that, Swiss franc, Japanese yen as well, considered as a massive, safety hedges, or risk off, as we would like to call it in the market. Obviously, we can see the US dollar is actually gaining a lot of strength against the actual Swiss franc as well. So from what we can see here against Canadian dollar as well, is that a lot of retail sentiment right now is actually prone to moving more towards the US dollar strength. Okay, now that could be purely on the basis that obviously market participants were actually expecting CPI data to actually overshoot or come way stronger than what the numbers actually came last night. Or it could be that they believe the short-term trend that's been actually prevailing over the last 3 weeks will actually continue, and the US dollar will actually gain more strength over the short to medium term. Okay. Also, another thing that's quite important here as well is if you have a look at the smart money mover, as well CIT report data, smart money tracker, we can see as well more bearish to the left and more bullish to the right. We can see also gold is actually gaining a lot of bulls at the moment as well as actually silver and a few other currency pairs as well. So it's a really, really good tool, predominantly for the fact that you can actually see where the commercial side of things, commercial money or institutional money, is actually moving in against its retail money. And it's important to understand what the big guys are actually doing in terms of the actual data itself. Now, central bank forecasts, another great tool as well. We can see that short-term interest rate forecasts as well for the major currencies or major banks. And then we can see the inflation forecast as well, actually, over the 2023 and 2024. The really important chart here that actually draws to my attention is the actual short-term interest rate decisions. So if you have a look at it on the left-hand side, we can see USD, New Zealand dollar, yen, pound, euro, Swiss franc, Canadian dollar, and Aussie dollar. And we can see at the bottom, obviously, the quarters. And as you can see, actually, we got a strong bullish trajectory at the moment with regards to the interest rate rises. And we actually expect these rates obviously to peak in the Q3 of 2023, which is obviously over the next 3 months. And then obviously the Fed is expected to ease off and actually cut the interest rates moving in 2024. Q1 to Q4, and in fact actually cut some of the rates that they've been actually lifting over the last year or so. So this actually provides a really good indication in terms of the economy moving forward. And given the fact that markets always look what's going to unfold over the next at least 3 to 6 months, it's a good indication tool. I wouldn't trade purely on this, but what I would do is actually use it as a guide when actually making those decisions. So I'm time conscious about how much we have at the moment here, so I'm not going to go into in a greater deal, but as you can see, it can add a lot of value. So if you do want to find out a little bit more about it, by all means, please click on the link below in our YouTube video and simply or get in touch with us. Let's continue our analysis and let's actually move on to the Euro USD. So as you can see, this is obviously the analysis from last week. It's I'm sorry if it's a little bit cluttered at the moment, but obviously since Monday, not much movement. We've seen more of a sideways move over the last couple of days in Euro. And as you saw on the sentiment and in the edge trader, majority of retail money is actually more on the short side of Euro at the moment. So I think the key point here at the moment in terms of the euro will be the actual key trend line that's applicable here. I will actually change that to the solid line just to provide a guide, because at the moment it's actually adding like a good support base. So that line has been broken at the moment. Obviously, in terms of the trend lines, the longer in period in time trend lines are, the more valid they are and more support or resistance they normally provide. So because this has been actually quite a lengthy period of time since September 2022, which is approximately 9 to 10 months, this trend line is actually a really good support level at this point in time. So given the fact that ECB is highly likely to lift 25 basis points later in the week, and we are highly likely to see the no change in Fed, my sentiment has actually somewhat changed, to be honest, since Monday. I was actually more bearish on the euro, but given the fact that European Central Bank will likely raise 25 basis points, I am actually switching or shifting my view at the moment and potentially could see a little bit of upside. Also, to coincide with that is the actual box in blue, which is supply and demand levels. And as you can see, the blue level is actually a demand level, which indicates there's a lot of clutter and a lot of big volume potentially coming to fill their positions one way or the other. So either to squeeze the shorts or to actually fill in and to go longs. At this point in time, we always have to look or try to find out what is the big end of town doing. So that's actually also another level that's coinciding nicely with the support level on euro at the moment. So we're likely to see a bit of movement in euro over the next couple of days. And as I mentioned the other day on Monday, break below the downtrend line would highly likely take us to the 105 level mark. Any upside or break about these levels, we could potentially see euro go all the way higher to around 110 levels. So in terms of the upside and the downside, we're looking at 2.2% to the upside if a trader was actually to enter these positions right now to go long. And in terms of the actual downside, if the pair was to break a significant support level, we are looking around 1.94%. So always something to consider. You got to fine tune your strategy. You got to feel comfortable with it, but it's important to see what is the risk versus reward. So that's it for euro. Let's move on to the next point, which I raised on Monday as well. I really want to quickly scan through it, is the volatility index. Volatility index is actually been creeping up from its lows back on 8th of June. So since last week, breaking through the significant level of around $17. Volatility index obviously measures the volatility within the actual market. The lower the volatility index numbers, obviously the lower the volatility or irrational moves in the market. The higher the volatility or the number, we are prone to get more erratic moves within the actual financial market. So as we can see, the moves have been quite subdued. There hasn't been probably enough liquidity in the market, and therefore we are not seeing those big moves or long candles within the charts. But obviously that's probably likely to change at some point, and we could potentially see that from tomorrow till Friday coming to life. Aussie USD is an interesting one, and that's something that I really want to go through today, because I actually find that hitting some major resistance levels at the moment. I did mention last week that if Aussie rates were actually to continue going upwards, we are going to see probably a likely super bullish move on Aussie, even though it actually broke through and fell through that major support level of 66 cents. Pretty much that's in line exactly what happened. So we've seen Aussie come back up into that zone, sideways zone that's been actually playing around for the past 6 months. And Aussie has been absolutely astonishing for the last few days. We can see quite an aggressive move to the upside. And since the rate change on last Tuesday, we've seen approximately 2.7% Aussie appreciate against the USD. I did mention last week break above that downtrend line, which is this line here. Is likely to actually give confidence to the Aussie bulls or traders actually getting in and adding on their positions, or simply entering the positions to the upside. And as we can see, that's pretty much exactly what happened. So Aussie is been on a bit of a rampage against the USD, and whilst it's actually hitting the resistance level at the moment, and it's only natural to actually see a bit of supply zone and sellers coming in, it could be simply as profit taking to the good moves that have been unfolding over the last week, or it could simply be short sellers are actually trying to actually squeeze in and get few pips to the downside on the back of that massive resistance level, which has been actually playing around for the past year or so. So that's important key level. A lot of short sellers actually like to find these key levels, and sometimes actually go the opposite way to the current trend. So what do we expect in Aussie at the moment? I guess that's the big question. Well, we've got unemployment data coming up this week. That's going to obviously play big in terms of the next move. I suspect if Aussie rates actually, or I do apologize, if US rates actually stay at 525 basis points and no rate rise, we could actually see Aussie maybe continue to go further up and break that major resistance level, especially depending on the unemployment data. One thing that's actually different for the Reserve Bank of Australia to, let's say, Reserve Bank of New Zealand or the likes of Fed, is that Australian government has been actually quite late in terms of starting and prompting up the interest rates. So we were one of the governments, or one of the countries that was actually the latest in actually starting to lift the rates. We are starting to catch up at the moment, and whilst majority of governments around the globe are actually coming to the end of the rate cycle, we still feel in Australia there could be at least one or perhaps two interest rate rises. And we feel the market has actually somewhat surprised in May and June. on the basis of the strong consumer price index data that came out. I feel actually market is forward looking at the moment and starting to factor in another 25 basis point interest rate rise in the month of July. So, the closer we come to the deadline and the more data that actually, comes out in terms of the CPI data, GDP data, PPI, etc. If it's looking that inflation is actually still continuing to be strong, then highly likely that the RBA will not hesitate to actually do another 25 basis point increase on those bases. And if this was the case, we are highly likely then we could potentially see more upside on the Aussie. So in terms of what could be the next level, if we are to break that 68 handle mark, I would probably suspect whilst 71 point would be a huge upside, and in the short term probably unlikely, in the short term, we could see something along the lines of 69 or 70 cent mark. So if you look at the upside on this and we actually do a measuring tool, we're probably looking another 2.37% to the upside. And given the fact that we've already had 2.2% upside, we are looking at a punchy move of 4.5% of Aussie going upwards. If this wasn't the case and Aussie was actually to continue, bouncing off the resistance level mark, we could see a bit of a downside pressure. And it's only normal to see that, especially after the big moves or big punchy moves in the market. We could see a bit of a pullback of approximately 2% to come down, and that downtrend line that's been actually providing or being a resistance level in the past on a couple of occasions, this could become simply a support level. So that's in terms of the actual Aussie versus USD. So I would still follow employment data. I would still look at the rest of the news around the globe to actually kind of make my decision and my strategy in terms of trading. Last week, we touched on gold as well. So I'll quickly touch on gold as well, just to see where we are at the moment. And not a surprise that actually there is not much movement in gold at the moment. That's only normal. Volatility index is actually way below and the lowest for the past 18 months. And as a result, when the moves are subdued, when there is not much movement in the market, gold actually doesn't move much. So gold is actually traveling sideways at the moment. Long-term uptrend line or support level is still there. We expect it to move sideways a little bit longer. As I mentioned last week, wouldn't be surprised to see a little bit more downside to that support level of around 1,910 level mark. And that could be probably the shortest or that we could see in the short term. Again, anything can happen. Markets can move. Better uncertainty around the global inflation and property market at the moment. So the shift can actually change very quickly. However, medium to long term, as I mentioned last week, still quite bullish on gold. Still believe there could be a little bit more upside. However, I see this phase as the consolidation right now. But again, we will see over the coming days in terms of where we go from here. So that's pretty much it, guys. I hope you really enjoy this. If there is anything else that you would like us to actually have a look for you, by all means, please let us know. And we would absolutely love to do some analysis and have a look. Anything in particular that you actually want us to analyze for you for the next week or so. Thank you, and we'll chat again on Monday. Take care.